Welcome back to Investing Talk Podcast. Today, we're looking into the whirlwind around Datavault AI. It's quite a story.
It really is. They've executed one of the most aggressive strategic pivots we've seen in a while.
Absolutely. And the big question we need to tackle for you, the listener, is pretty straightforward. Is Datavault AI a good time to buy right now? Now, before we get into all of that, and there's a lot to unpack, please do remember to subscribe, like, and hey, leave us a comment.
Yeah, definitely.
And actually, if there's a specific company you've been watching and want us to analyze, just let us know in the comments below.
That's pretty much our mission today, right? We've got a stack of recent reports here, and they all point towards this really intense repositioning by Datavault AI.
Repositioning into what exactly?
Well, they're moving hard into what you might call next-generation financial infrastructure. Think AI, quantum computing, and maybe the most interesting part, data tokenization. So our goal here is really to look at the evidence from these sources and figure out if this very expensive strategy can actually deliver the kind of financial turnaround management is promising.
Right. And you can't really understand where they're going without looking at where they've just been. I mean, just months ago, things like shaky.
Shaky's putting it mildly. They were dealing with some serious regulatory turbulence.
And a Nasdaq issue, right. Trading below the dollar minimum bid price.
Exactly. That triggered a compliance warning back in May. And, that kind of threat hanging over a company, it makes institutional investment basically impossible.
Yeah, big money stays away. But what's kind of amazing is how fast they dealt with it.
It's fascinating.
Yeah.
The sources we have confirm that specific regulatory risk is gone, completely removed.
How recently?
Well, last month, between late September and early October, they managed to stay above that dollar mark for the required time. And Nasdaq formally closed the whole matter on October 10th. So that stabilization is fundamental. It basically cleared the path for serious investors to even consider the stock.
And they didn't just stop at fixing the compliance thing. They also worked on the balance sheet.
Simultaneously, yeah. They strengthened their financials, wiped about, $13.3 million in long-term debt off the books.
How'd they manage that?
Converted those notes into equity. Now, that definitely improves the leverage profile, less debt risk, but...
There's always a but.
There's always a but. We have to acknowledge, converting debt to equity, it risks diluting existing shareholders down the road. It's a trade-off, right? Stability now versus potential dilution later.
Okay, so stability improved, debt down. But then came the really surprising move, the big funding news in September.
Ah, yes. Talk about risk appetite. This is where it gets really interesting.
They secured a seed investment, right? A pretty huge one.
Staggering, really, $150 million. But here's the kicker.
It wasn't cash.
Nope. It was secured in Bitcoin, valued at the time they signed the deal.
Wow. Okay. And that's specifically for?
Earmarked immediately to fund their big pushes into supercomputing and quantum simulation initiatives.
Taking $150 million in Bitcoin, I mean, that's a statement, isn't it? Given the volatility, what does that tell us about how they're thinking?
It tells us they are, fundamentally committed to playing outside the traditional financial sandbox. They're clearly targeting a future that's, let's say, crypto-native, especially around data and tokenizing real-world assets.
RWA tokenization. We'll come back to that.
Exactly. And that commitment, that funding, it leads us straight into their really aggressive growth story, which is all about building the physical infrastructure needed to support these huge digital ambitions.
And this growth story got very real very recently. The formal announcement was just a few weeks ago, October 23rd.
Yes, this geographical pivot, it suggests they're moving at, warp speed.
Okay, break it down for us. What did they announce?
It's a multi-pronged expansion happening pretty much all at once. First, relocating the corporate headquarters to downtown Philadelphia.
Okay, new HQ.
Second, launching a massive, and I mean massive, 180,000 square foot Center for AI and Quantum Computing Excellence down in Sandy Springs, Georgia.
180,000 square feet.
Wow. And third, establishing a global footprint right away with a quantum computing and digital twin embassy in London.
Wait a minute, hold on. Move the HQ, open a giant center in Georgia, and launch a London embassy, all at the same time. Isn't that just asking for trouble? Especially for a company that just got its feet back under it with the compliance stuff.
That pace, that operational execution, that is absolutely what keeps analysts and probably some insiders up at night.
It seems like a huge risk.
It is. It's probably the single biggest risk. And how well they execute operationally will be watched like a hawk. Now, They have brought in new leadership, expanded their advisory teams with some prominent names to try and manage all this.
But still.
But still, integrating a whole new global footprint while you're also trying to launch new products, it's a monumental management challenge. No question.
So the market's betting they can handle it, presumably because of the products these new facilities are supposed to enable.
Precisely. The hope, the bet, is on the revenue drivers for the second half of 2025. And those revolve around data monetization and these next-gen financial systems.
Which brings us to the data exchanges.
Yes, they're launching 4 independent data exchanges. The sources list them as International Elements, NIL, Information Data, and the American Political Exchanges.
Okay, 4 exchanges. And this is where that RWA tokenization concept really comes into play, right?
Exactly. If you're listening and maybe not familiar with real-world asset tokenization, RWA, think of it simply as digitizing ownership of, well, almost anything.
Like real estate or...
Real estate, carbon credits, art, you name it. Making these normally illiquid assets tradable, usually on a blockchain or some kind of digital exchange.
And Datavault AI's role is?
They're building the engines behind it, the data analytics, the AI, things like their data value and data score platforms, to analyze value and help manage those tokenized assets.
Got it. So the exchanges they're launching are meant to be the marketplaces for this stuff, powered by their tech.
That's the plan. These exchanges are designed to capitalize on this huge emerging market. And remember, they already have that IBM Platinum Partner status, which helps. These new exchanges, plus their existing partnerships, that's the engine expected to deliver that ambitious revenue growth management is talking about.
Okay, that's the core plan. But the sources you looked at also mention some more speculative catalysts, things with potentially huge upside.
Oh, yeah. There's definitely some high-impact speculation floating around, stuff that offers really asymmetric upside if it pans out.
Like what?
Well, first, there are pretty strong rumors tied to their acquisition of intellectual property from NYIAX. You remember that?
Vaguely, yeah. An ad exchange tech company.
Right. Well, the market chatter suggests this IP could lead to them launching their own Nasdaq-listed token exchange.
A regulated token exchange listed on Nasdaq.
If they could pull that off.
Yeah.
I mean, you're talking about genuinely disrupting traditional financial market infrastructure. That would be an enormous catalyst. Game-changing, potentially.
Okay, that's a big if, but huge potential. What else?
The second key rumor is talk about advanced discussions for Fortune 100 licensing deals.
Licensing what? Their AI engines?
Exactly. Sources suggest some top-tier banks might be looking to license data value, data score, and their specialized Datavault Bank AI engines.
To use themselves.
For use within the bank's own internal tokenized asset systems. If that happens, getting major banks to license your tech, that would be the strongest possible validation. Real institutional adoption.
Okay, so we've covered the stabilization, the cleanup, the really aggressive expansion plans, and some potential home run catalysts. Now we absolutely have to get into the numbers because the financial picture here is, well, it's a story of extremes.
It really is. And you have to start with the top-line guidance because, frankly, it feels like an all-or-nothing bet by management.
Lay it out for us. Where were they and where do they claim they're going?
Okay, so for all of 2024, Datavault AI reported revenue of $2.67 million. Okay, remember that number?
$2.67 million. Got it.
Now, management is guiding for $12 million to $15 million in revenue, just for the second half of 2025.
Wait, from $2.67 million for a full year to $15 million in just 6 months.
Massive sequential acceleration. It's a true inflection point they're forecasting, one that absolutely must materialize to justify this whole strategy, this whole spend.
And looking further out.
Further out, they've set targets for 2026 between $40 million and $50 million.
Okay, that potential jump is clearly why the stock has caught attention. But we need the other side of the coin, the cost.
And the cost of this pivot is staggering.
Yeah.
You absolutely have to provide that balance because they're reinvesting so aggressively. New HQ, the Georgia Center, London, the net loss balloon.
How bad was it?
Nearly $68 million net loss in 2024. That's a trailing 12-month profit margin of, wait for it, negative 1,545%.
Minus 1,500%. Ouch.
Yeah. This is a high-stakes, high-burn-rate operation. It needs every penny of that $150 million Bitcoin funding and maybe more down the line.
That context is critical. And yet, despite that burn rate, analysts seem largely on board.
Largely, yes. The consensus rating, according to the sources, is a strong buy.
And the price targets.
But consensus target sits at $3, which from the recent close, around $2.25, offers roughly, 32% upside?
decent upside, but what about the more bullish cases?
Well, it's a big if they execute flawlessly and actually hit the high end of that revenue guidance, the more aggressive analyst targets push the stock up towards $7.
Okay, huge range there, $3 to $7. So when do we get the first real indication if this acceleration is actually happening? What's the key date?
The critical near-term catalyst is definitely the Q3 earnings release. That's scheduled for November 14th, so just around the corner.
And that report needs to show.
It has to demonstrate that sequential revenue growth is already kicking in. Even if it's small, it needs to show the trajectory is changing to give the market confidence in that huge H2 guidance.
Makes sense. Okay, let's quickly touch on the technicals. Where does the stock stand right now?
So the sources we have are from October 24th. As of then, the stock was trading around $2.25.
And the recent range?
It's been volatile, definitely in an uptrend overall, but look at the 52-week range. 0.25 cents on the low end, up to $3.10 on the high end. So big swings.
But the shorter-term signals, are they positive?
The short-term technicals seem to back up the fundamental story, yeah. Moving averages suggest momentum is shifting firmly to the buy side, and the MACD indicator is showing a bullish crossover.
Suggesting traders are getting interested now.
It looks that way, yeah. Like traders are trying to get in ahead of potential news or that earnings report. Key resistance is just above where it was trading, around $2.43. A solid break above that could open the path towards that $3 consensus target.
What about sentiment? Retail interest, institutions.
Sentiment definitely improved. Both retail chatter and, more importantly, institutional flows picked up right after the Nasdaq compliance news came out and management raised that guidance. That was a clear signal change.
Anything else technically significant?
We should definitely point out the high short interest. There are quite a few bets against the stock.
Yeah.
Which, creates that classic short squeeze potential if Q3 earnings do surprise positively.
You could see a sharp move higher as shorts cover.
Right.
Exactly. Okay, so wrapping this up for the listener who might be considering an investment, let's just hammer home the key risks one more time.
Absolutely crucial. The primary risks here are really internal. It boils down to execution and dilution.
Execution meaning, can they actually manage all these moving parts?
Precisely. Can they deliver that rapid revenue growth?
Yep.
Because it must offset the high cash burn. If it doesn't, they'll likely need to raise more capital,
leading to more dilution for existing shareholders.
That's the cycle they need to break with revenue growth.
And the integration risk we talked about.
Paramount. Integrating the new Philly HQ, that huge Georgia Quantum Center, the London outpost, and new leadership, all while launching 4 exchanges. It's a massive operational and, frankly, key man risk. If certain people leave or they stumble on integrating these pieces, it could cause major delays.
Okay. One last point from the technicals market resilience.
Right, the beta. The stock has a relatively low beta, around 0.39 according to the sources.
Which means?
It might hold up a bit better than the overall market during big sell-offs, but the flip side is it could also underperform during strong, risk-on market rallies. It's not necessarily a stock that will just fly when everything else is flying, might be more tied to its own specific news flow.
Got it. Well, this has been a really fascinating look at a company undergoing a truly dramatic transformation.
It really has.
Yeah.
If you try and connect all these dots, Datavault AI is positioning itself as a potential, maybe even central, player in data monetization in this whole emerging real-world asset tokenization space.
So, based on everything in the sources, the financial cleanup, the aggressive but clear roadmap, that huge revenue guidance, what's the overall take?
Based purely on the sources provided, the assessment leans quite positive, actually. A bullish rating of 8.5 out of 10. The opportunity seems clear, the potential is there, but that execution challenge is just monumental. You can't ignore it.
So back to the original question, is it a good time to buy now? What do the sources suggest for different types of investors?
Well, they suggest the current levels, around that $2.25 mark, could be attractive for 2 main groups. First, you've got the shorter-term catalyst-driven investor. They're focused almost entirely on that November Q3 earnings report as the make-or-break proof point.
Get in before, hope for good news, potentially get out.
Something like that, or hold if the news confirms the thesis.
Yeah.
Second, you have the longer-term investor. They're looking past the quarter-to-quarter noise and banking on Datavault AI, achieving structural leadership in that RWA tokenization market over the next couple of years, through 2026 and beyond.
Okay, 2 different approaches there. All right, let's leave our listeners with a final thought to chew on, something to really consider.
Okay, how about this? Management has set this incredibly aggressive revenue target, right?
Mm-hmm.
$12 million to $15 million for just the second half of 2025.
Yeah, the number that underpins everything.
So the provocative question is, Can they really successfully integrate a brand new headquarters, a massive quantum center in Georgia, a London embassy, and launch 4 separate data exchanges, basically all at the same time, fast enough to meet that guidance? Or is the sheer complexity, the integration risk, just too high? Will it inevitably derail the timeline?
That really is the billion-dollar question, isn't it?
It absolutely is.